Well, it's the weekend and you're either making money or you're spending it, or you're doing both. But I hope you're doing a little bit of money making. It is 6 o'clock in the morning on Saturday. Everybody else is sleeping, hung over. I'm talking about monthly paycheck portfolio. Come on, I'm trying to get that passive income up. And this one is going to be special. It is a REIT review. How to get exposure to real estate the easy way, okay? Did you know you can own real estate without ever buying any real estate? That sounds weird, right? But the stock market is a beautiful place where ideas come to life, where ownership exists without the hassle, where you can sacrifice a little bit of yield in exchange for a lot less work. Right now, my rental homes are slowly getting beat up by the mother of nature, okay? One needs a new roof and new windows. Another needs landscaping barriers. Weeds are growing up. I forgot to put landscaping barrier underneath the rock. And every summer, I got to go over there and pull weeds. I like my properties to be nice for my tenants. It's constant maintenance, constant time, constant money. And on top of that, I have to shop for tenants, manage tenants, regulate tenants. That's real estate the hard way. And yes, my yield is pretty high, okay? I make a lot of money with Fenwick Forest. But why I like REITs instead. With REITs, again, real estate investment trust, I get to outsource all of the hard work. I can let a real company with real people, a real plan, and a team of experts work around the clock to manage real estate for me. No midnight phone calls, no roofs, no tenants texting me about dryer vents, toilets, the HVAC went out, the lights aren't on, none of that crap. Not only does this require less work, it gives me exposure to real estate I could never, I don't want to say never, I could hardly buy on my own. Like, think about this. I can get exposure to AI data centers, football fields of computers. I can get exposure to Dollar Generals all across America, to gas stations, cell phone towers, hospitals, massive manufacturing and logistics warehouses. Right now, I ain't got that hospital money, okay? You can call me Dr. Fenwick, but I ain't got Dr. Money. And even if I did, I would be stuck probably to one property, to hospitals. Any piece of real estate I can imagine, there's probably a REIT for it. Instead of owning one property or maybe 5 hospitals, I can own thousands of properties across industries with just a few $100s. Now that is leverage, okay? Let me give you a really brief REIT explanation. REITs are able to pay higher income because U.S. tax law requires them to distribute at least 90% of their taxable income to shareholders. Taxable income is what's left after expenses. In exchange, REITs generally don't pay corporate income tax, which allows more cash flow to be passed directly to investors. That structure makes REITs especially attractive for the blue-collar boys and girls who want income that shows up consistently. And that brings me to the focus of this video. These are monthly paying REITs that I'm watching, some quarterly, okay? And in some cases, already own real assets, real businesses, long-term durability, okay? I'm not interested in REITs that destroy their stock price just to chase yield. It's a very similar idea with covered call ETFs. I don't want any REITs that their stock price constantly goes down in value. I want them to hold or go up in value. So here are my top 7 monthly REITs that I'm watching. Disclosure, some of these I already own. That is not personal investment advice to you. This is just for informational purposes only. I have no idea what your risk tolerance is or what your goals are. I'm just telling you what my goals are. Passive income, baby. Monthly paychecks, baby. So Realty Income, numero uno. Realty Income. What do they invest in? Look at the stock price. Absolutely beautiful. All right, so they got single tenant retail and commercial properties leased to companies like Dollar General, Walgreens, CVS, and 7-Eleven. You driving somewhere this weekend? Well, thank you for the paycheck. Dividend yield. Let's check it out right here live. Dividend yield, 5.28%. Can you freaking believe that? Every month, they're paying shareholders 27 cents. God. Woo! Oh, baby, wake up. We got to make money. All right. So I really like Realty Income. Number two, you're going to see at the end of the month on the monthly paycheck portfolio January review, I'm giving you a little inside information. If you're up and watching, STAG, ticker symbol STAG, Stag Industrial. They do industrial warehouses and distribution centers. If you've ever gone from Bardstown to Louisville, you've passed one of these. Dividend yield, check it out. 4% right now. Every quarter, they've changed their dividend frequency to quarter. I don't know why they would do that, but they did, and that's all right. That's okay. Dividend frequency, 38 cents. 38, it's really 0.3875 cents. So you could round up, but I'm not going to. Okay. It's boring real estate, which is a good thing. I'm cool with that. Strong tenant demand. I don't think industrial warehouses and distribution centers are going anywhere, because I see that Amazon and FedEx truck all the time. Not monthly income, quarterly income with a really stable stock price. All right, let's go to another one that I'm watching. ADC, Agree Realty. Okay. High quality retail real estate leased to strong tenants. You ready for this? Like Walmart, Home Depot, and Tractor Supply. Dividend yield, 4.3%. Every month, they're paying 26 cents to shareholders. 26 fucking cents. Counting pennies, aren't you? You're not? What's wrong with you? Lower yield, a little bit lower yield. I like the quality. Home Depot. They got a conservative balance sheet, excellent long-term value preservation. I mean, look at this 15-year. We'll go to a 1-week chart. Tell me that ain't beautiful. From 2016 to 2026. Just uppity, up. Okay? Crazy. Now let's go to EPR Properties. EPR, Experimental Real Estate. EPR Properties. Ticker symbol, EPR. Okay, this is like movie theaters, entertainment venues, and attractions. You know how many people are going to be watching the Miami versus Indiana football game? Entertainment pays. You know what the yield on this effort is? 6.33%. Every month they're paying 29 cents to shareholders. A little higher income, clearly more cyclical. I mean, look at this stock chart compared to ADC. A little more volatile, right? Higher income, more cyclical. Monthly income with probably a little more upside potential with it being entertainment. I'm fascinated by this. I mean, holy moly. I'm about to go wake the chickens up. LTC Properties. LTC Properties is the next one. Look at this beautiful. Senior housing and skilled nursing facilities. Higher income, 6.8%. Monthly, they're paying 19 cents to anybody that's got $39.92. That is freaking crazy, okay? They got some demographic tailwinds from an aging population. Healthcare real estate, you don't want to manage yourself. You don't want to wipe the booty of an old person. Well, here you go. Monthly income with reasonable stability. All right, let's go to another one here. Main Street Capital, MAIN. This is a beautiful stock chart. Almost can't even tell it pays a distribution, because remember, whenever a company, real estate investment trust, covered call, pays a distribution or a dividend, the stock price the next day that distribution goes out is going to go down by the dividend they pay, because they are giving cash on their balance sheet to shareholders, right? So wouldn't it make sense that their stock price goes down by the cash that has left the company? Yes, it would. Main Street Capital, lower middle market private companies. You could argue it's not technically a REIT, but it pays monthly income, okay? Strong track record of income and price stability, well-managed, shareholder-friendly structure. I like it. Not technically a REIT, but we're going to watch it anyways. Here's another one that's been around my life the whole time I've been investing, from the airports in Lexington when I was with old Jimmy, my landlord, to now. Okay? AGNC Investment Corp. Agency mortgage-backed securities. Dividend yield. This yield is high. This would go into the level 3 yield max funds as a REIT, okay? Because 12% dividend yield right now monthly. Watch this one. As any pullback we get, it may be something that juices up the monthly paycheck portfolio, but just watch it. So again, REITs are great. Just watch it. Thank you so much for tuning in. This content is for educational and informational purposes only. It is not intended as personalized investment advice. All investments involve risk, including the potential loss of principal. Real estate investment trusts or REITs can be affected by interest rates, economic conditions, tenant risk, market volatility, dividend payments, and are not guaranteed and may change over time. Any securities or strategies discussed or mentioned for general educational purposes only, may not be suitable for every investor. Past performance is not indicative of future results. Nothing in this presentation should be construed as a recommendation to buy or sell any security. Fenwick Financial LLC is a registered investment advisor. Advisory services are offered only to clients who have entered into a formal advisory agreement and after a review of their individual financial situation, goals, and risk tolerance. Registration does not imply a certain level of skill or training.